Is the buyer's market here to stay? I've been talking week after week about how we are in a buyer's market and are we going to see this spring selling season pick up? We're going to talk more about that today because we are not the only area seeing this buyer's market. Plus, there is some interesting data about how there is a big divide in the market between the luxury market and the rest of the market. So I'm going to share some of that because it's quite interesting on how that is very different. So welcome back. Let's chat about a buyer's market. According to Redfin, it's a buyer's market. For many home buyers, it doesn't feel like it. Of course, they are referring to affordability. And I've gotten a lot of pushback when I've talked about buyer's markets where people have said it's way too expensive to be a buyer's market. And the bottom line is, buyer's market just means buyers have leverage, and that's where we're at today. There are more listings for sale than buyers willing to buy them. There's less demand, more listings for sale, therefore buyers gain leverage. So whether you like the prices or not, you still have more leverage as a buyer because you have more options, and sellers have to compete against one another in order to get their homes sold. Redfin is saying there were 3.7 months of for sale supply on the market in January, which is the most we've seen in 6 years. An increase in supply and drop in home buying demand has tilted the national market in favor of buyers. Florida metros top the list of buyers markets. 2 upstate New York metros, Rochester and Buffalo, top the list of markets, which still favor sellers. And it's kind of interesting because what we're seeing right now is the Sun Belt, the West, being more in a buyer's market, and the Northeast being more in a seller's market, which is a complete flip-flop from what we had seen years past. They go on to say that sales are slow. Pending sales fell 6.3% in January. That's the lowest mark since the early days of the pandemic. Listings are sitting longer. Price growth is slowing, more negotiation is possible, and deals are falling through. Redfin saying home purchases were canceled at the highest January rate since at least 2017, last month. So basically, buyer's market in a lot of areas of the country. They're saying some good news for home buyers, slower price growth, more supply, more bargaining power. This article kind of talking about the same things. They're saying that there's 5 months of supply on the market, up from 4.1 months a year earlier, and the most since 2019. Buyers have more new inventory to choose from too, because there's new listings that are up 4.2% year over year, and buyers have more negotiating power. Now, all of this is very similar to what we're seeing here in the Phoenix metro area, both for resale homes and new construction homes. Those new construction homes are still offering great incentives. Builders tend to have a lot of spec homes to offer as well. And you have choices as a buyer. Same with resale. And we're going to look at where our listings, active listings, and then the new listings are as well here in a minute. Last week, we got some news about mortgage rates. They dropped to their lowest level in 2 months, upping the purchasing power, giving home buyers a window of opportunity. A home buyer on a $3,000 monthly budget can afford $446,000 home with a 6.9% mortgage rate. That's roughly the daily average as of February 21st, which is the lowest daily average mortgage rate since mid-December. We've been seeing rates really steady for the most part, and just the slightest decline about 2 weeks ago. And then once again, last week, we had some declines. It says the decline in rates is giving home buyers a bit more purchasing power. In the last 9 days, a buyer on a $3,000 budget gained $7,000 in purchasing power as rates fell from 7.13% to 6.89%. So in essence, that buyer could have purchased a home worth $439,000 with a 7.1% rate. Roughly the average on February 12th. So it does make a difference, as these rates go down, and hopefully we continue to see a little bit of downward movement on rates and increase some of that affordability for buyers. As Mortgage News Daily is saying, mortgage rates were already in line with the lowest levels since December 18th by last Thursday. Then they dropped to the best levels since December 12th, a day later. So we'll see how this continues. What happened last week is we ended up seeing some weaker economic data, and that promoted bond buying, which in turn pushed rates lower. So we'll keep an eye on what's happening this week, if there's any news that comes out that may affect rates, and maybe they'll inch down a little bit more. But bottom line being, if you're a buyer, yes, you may not like the prices or the rates. You do have some other things playing to your advantage. So if we do get some dips in rates and you do see a little bit more affordability from that, it could be a good time to take advantage if you're ready to buy a house. Now, if you are looking to avoid today's mortgage rates altogether, it is possible with an assumable loan. So make sure to check the description below. We have a guide that explains how all of that works and a home search for homes for sale with assumable mortgages. Now, there's some interesting things happening with FHA. Job cuts threaten to disrupt a major piece of the U.S. mortgage market. So there are layoffs at the Federal Housing Administration. Many of you have probably heard of all of this going on and many of the government layoffs taking place. And how this could affect housing is really like longer term times for mortgages if we don't have enough people working, particularly with FHA. So FHA has insured more than 50 million mortgages. They don't provide the loans itself. That's done by certain approved lenders, but providing mortgage insurance expands credit access by encouraging lenders to make loans to borrowers who might not otherwise qualify for conventional mortgages because they have lower credit scores or less money for a down payment. So an FHA buyer can be sometimes a first-time home buyer or a buyer with lower credit score. This has always been a great option for buyers as a loan program if they fit into those categories. Now, this isn't going away, but if they are cutting jobs here, it may take a much longer time frame for FHA loans to be processed. So we'll see if this really impacts the housing market at all. Kind of some interesting changes going on there. Now, let's talk about this divide in luxury versus the rest of us, because it's pretty interesting. And by the way, if any of this is helpful for you, make sure you consider subscribing, share this video with someone who may find it interesting. So according to the Cromford report, they looked at 3 major zip codes, which are the more expensive zip codes in the Phoenix area: 85253, 85255, and 85262. And between January 1st of 2024 and February 23rd of 2024, so basically same time period, beginning of the year till today, but last year, there were 220 closed listings for single-family detached homes in those zip codes. The median sales price was $1.5 million, and the volume was $445 million of sold volume. Now, these 3 zip codes are the higher end zip codes in the valley. That's where we tend to see more luxury. That's why they're focusing on that. Now, if you compare that to this year, the same time period, there's been 247 closings, so a little bit more, with a median sales price of $2 million, so about $500,000 more on the median than last year, and a total dollar volume of $673 million. Unit sales have increased by 12.3%. Dollar volume increased by 51%. The median sales price has increased by 34%. Average sales price increased by 34%. Total square foot sold has increased by 33%. And the average price per square foot has increased by 13%. So all of this is focused on luxury. The big difference is that is not what's happening in the rest of the market, right? We are in a buyer's market. We are seeing some price cuts taking place. And we are seeing, definitely not seeing prices increase by 34% year over year. Not to mention, there were only 247 sales that accounted for $673 million of sold volume. That's a lot of millions of dollars just from 247 people in like 2 months. Obviously, these are homes that were going under contract most likely in December, maybe November, that were closing in January. So it's been over a little bit of a period of time, but the luxury market is hot. And it's very interesting how that is really behaving much differently than what we're seeing in the rest of the market. Now, this could be because many luxury buyers don't get loans, they pay cash. And so they're not really affected by where mortgage rates are, and much less price sensitive as well. So I thought this was really interesting to share as we're kind of getting this like divide between how luxury is performing and the rest of the market. So let's look at listings under contract. We have been talking about how this number is going to help us understand what our demand looks like and whether or not we are going to have kind of a typical spring selling season. So far, it's keeping up with 2024, which is good news. And the similar pattern to 2023, a little bit lower, but still keeping up on a down or upward trend. If this started to go down, we know our demand is going down. We're not seeing as many listings under contract each week. And as supply continues to add to the market, we would certainly be getting deeper into a buyer's market. So for sellers, this is a very encouraging thing to see because we are seeing that demand keep pace at the moment. Now, if we look at our months of supply, I shared this a couple weeks back. We're at 4.3 months of supply throughout the Phoenix area as a whole. This is similar to what they were saying in that Redfin article. You know, if you look back to, November of 2023, if we go back even further than that, you can see supply was much, much lower when we had a much hotter market, 1.4 months of supply. Now we're at 4.3. But that's okay. 4.3 is not bad at all. So if we go back to like 2014, 2015, when we had a bit of a more balanced market before we started getting closer to a seller's market and less supply, we were at 3.8 months of supply in 2016. Here we were in 2015 at 5 months of supply. So we're really kind of going back to that same zone as what we were in the last balanced market that we had. Although, we got to keep an eye on this and see if it continues to climb. And by the way, if you're curious about what the months of supply is in your city, check the description below. I have a link where you can get that information. Active listings adding every week. We are still seeing this increase here. So that's something to keep an eye on, but nothing that is too drastic yet. If we look back to like 2023, obviously a very different pattern. Same with 2022, but let's go back to 2015, similar to what we were just looking at 2016, kind of following that same pattern as that balanced market, assuming we start to see a curve here. So let's keep an eye on this as well as the listings under contract. Then this is what we were looking at last week. This is new listings by month. So this is showing the new listings coming on market, not just counting how many active listings we have as a whole. The new listings for February, we're at 7,449 so far. We've already beat our 2023 level for new listings hitting the market. And we'll see if we outpace our 2024 level of new listings. In January, we did. We hit 10,005. And last year it was 8,700. So we definitely outpaced in terms of new listings hitting the market. For last month, February, still have a little bit more time in this month, but we are getting very close. So maybe we won't beat it this month. Maybe that new listing count is actually slowing down. Now, the price changes. I wanted to share this because we're talking about buyers markets. We're talking about sellers not having as much leverage. So we are still seeing price changes, meaning price cuts, sellers cutting their price of their listings. Last week, there were 3,213 homes on the market that did a price cut, 3,000 the week before, 3,200 the week before that. And you can see we kind of saw an increase in this over the last month time frame. So as we continue to see more listings hitting the market, if we're not seeing the buyer demand keep up, then this will continue to increase. So for buyers, good news to see this, right? Listings are getting price cuts. For sellers, this lets us know that we need to be pretty competitive with our price when we hit the market. If you want to sell in a good amount of time, then hitting the market with a competitive price is going to allow you to do that rather than starting high and taking these price cuts week after week. So the CMI overall 84.7. We are definitely in a buyer's market according to the CMI. Demand is at 78.7. So that's about 22% below normal, but this has been increasing. And then our supply, 92.9, also increasing. And this is only about 7% below normal right now. If we look at the table of all of the major cities, once again, there's a lot of red arrows. We have a good number of cities in a buyer's market here at the bottom, everything from Peoria down to Maricopa. A few in a balanced market, Avondale, Glendale, Mesa, Cave Creek, and then 7 that are actually in a seller's market, everything from Phoenix up to Chandler. Now, what's interesting is the average change month over month did not change this week to last week. It was negative 8% both weeks. So that is showing that we are starting to see a slowdown in the movement towards a buyer's market when we look at all of these cities. It's just 1 week. It's not a trend yet, but something to take note of. We're also seeing that listings under contract are following the right pattern. So all in all, I feel like these are indications that we are going to start to see that stronger spring market start to take hold over the next month. But, we'll see what happens. It's hard to say for sure. The contract ratio has been heating up too. It's the overall contract ratio is about 30, I think it's 37, 38, if I'm not mistaken. Let's double check if I can get back to just these bars here. 36.9, so about 37. This has been increasing over the last month. And then when we look at the map, you can see that there are a few zip codes that are hotter. Chandler in particular, 85226. This zip code here has 56 active listings and 49 of them are under contract. So as a buyer, you're going to see a lot more competition there. As a seller, you have a little bit more leverage in that zip code. So keep in mind that every city and some zip codes are behaving a little bit differently. You could be in one area as a buyer and be able to lowball the seller and get a response. And you could be in another area where the seller's looking at multiple offers. So you really have to make sure that the agent that you're working with understands the market. They're able to guide you appropriately on those things. Now, if you are a seller or a buyer and you're just wondering what that months of supply looks like in your city, check the description. I have a link where you can get that information. And assumable loans are still a really great way to avoid these higher interest rates. So if you're a buyer thinking about that, the description below has a guide on how assumable loans work. We also have a list of homes that are selling with assumable mortgages, so take a look at that. I'll be back next week with another market update. Thanks so much for joining me.